Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be a video about the US stock market, or really the S&P. And there are a lot of parallels with what we're going to talk about in this one with the cryptocurrency market. So why are we looking at the stock market when we're sort of trying to work out what the crypto space is doing? Well, it's because there's a correlation there. You know, the stock market, certainly the S&P and probably more so the NASDAQ, are very correlated with Bitcoin and its movements, and potentially what may happen in the forecast for the stock market is going to have an impact and a bearing on Bitcoin and the crypto space. And that's what we're going to talk about in this video, because what Mike Wilson potentially is calling for, which is a crash or a double-digit percentage drop to hit the stock market, namely the S&P, early next year, very much lines up with our thesis of what we think Bitcoin is doing at the moment. We think it's essentially setting up and going to do similar price action to what happened going into March 2020. So we called the rally from sort of 15K for Bitcoin, 15.6, I think it was, 15,600, that sort of area. So you're going to get a short squeeze. Potentially we're looking at Santa rally, and it's kind of played out thus far. And we will skim past Bitcoin. And really, I'm going to wait till my daily cryptocurrency market update video to get more into that and look at the dollar and everything else. But this is going to be stock specific. And of course, there are going to be parallels and some wisdom to be had from what the stock market is going to do and how this is going to affect Bitcoin. You know, the dollar has been particularly weak. I do think the dollar and this downtrend is subject to change relatively soon. And I think certainly that the stars are very much aligning with what we're calling for, given potentially what's going to happen with the stock market in early 2023. So this video was really inspired. Chris Weston, who's well worth a follow, somebody that I actually gained quite a lot from in terms of following his Twitter. Mike Wilson's Morgan Stanley advising clients to cut out of US equity tactical long, so trades essentially that were long. We are now right into our original upside target, and we'd recommend taking profits before the bear returns in earnest. He's called it pretty well of late. He has indeed, and he's essentially calling for an exiting or a getting out of long positions on the stock market. Earlier in the week, or this may have even been last week when I was reading this article, he essentially called for a wild ride. Morgan Stanley's Mike Wilson predicts double-digit percentage drop will hit stocks in early 2023. So this is interesting to me because this kind of lines up with our thesis of what we think Bitcoin is essentially doing. And I will get into this in a lot more detail and look at the dollar more specifically in my daily market update. But essentially, we had a bullish div here. We looked at the last time that we had a bullish div, essentially led into March 2020, and we're calling for a similar thing to take place. We're going to get a rally that's going to lead to a pullback, and this is going to have a lot to do with the dollar reaffirming. Right now, you know, the dollar has been very weak, and your stock market has done very well off the back end of this. The top for the dollar was very perfectly the bottom for these stocks, or the local bottom. But in my opinion, and in the opinion of Mike Wilson, this is nothing more than a relief rally that is ultimately going to lead to further downside. And I think he's calling for, you know, potentially a 20+% move to the downside for the stock market into next year. This, of course, is going to have massive bearings on the crypto space. We do still think that there's going to be a bit of an extended rally. And we've still got quite a way to go. You know, there's quite a lot of people that need to flip bullish before we take this to the downside. But Mike Wilson's really sort of warning that, look, you know, this is still a bear market, and ultimately it will reaffirm, and you probably don't want to be holding long positions when that takes place. And we've likened longing the cryptocurrency market at the moment to really playing Russian roulette. We know the gun is loaded and downside is coming. We're just hoping that, you know, we aren't the unlucky ones that, you know, come out not so well from taking these positions. So we are still expecting more upside. Let's get into what he says, and then let's sort of round this up and relate it to our cryptocurrency market. You are in a very much a rising wedge structure for the stock, for the S&P. In my opinion, it's very much still intact. So there's no divergences really taking place. You know, this is still, I think, got a little bit more to come, and I can kind of see a pop out the top of this before maybe you end up in some sort of a double top situation before what Mike Wilson's talking about actually takes place on a reaffirming dollar. and potentially there's going to be bad news associated with this. So investors may be on the doorstep of a deep pullback. Morgan Stanley's Mike Wilson, who has an S&P 500 year-end target of $3,900 for next year, warns corporate America is getting ready to unleash downward earnings revisions that will plummet stocks. So talking about the kind of recessionary environment that we're in, we still do think that this recession has not played out. We haven't seen the worst of it. So this very much ties in with our thinking. It's the path. I mean, nobody cares about what's going to happen in 12 months. They need to deal with the next 3 to 6 months, he told CNBC. Fast Money on Tuesday. That's where we actually think there's significant downside. So while 3,900 sounds like a really boring 6 month, no, it's going to be a wild ride. Wilson, who serves as the firm's chief US equity strategist, so he's the chief US equity strategist for Morgan Stanley, so he's a serious guy, and chief investment officer, believes the S&P could drop as much as 24% from Tuesday's close in early 2023. So he's calling for a crash next. And we'll look at that and show you what a 23% drawdown looks like and where that takes you. And this, of course, is going to have correlations with the crypto market. The cryptocurrency space will not escape it. You should expect an S&P between 3,000 and 3,030 or 300 sometime in probably first 4 months of the year, he said. That's when we think deceleration on the revision on the earnings side will kind of reach a crescendo. On Tuesday, the S&P closed at 3,957, a 17% decline so far this year. Wilson's year-end price target was 3,900 for this year too, so he's been spot on about that, by the way. The bear market is not over, so we also agree with this thinking. We've got significantly lower lows if our earnings forecast is correct, and he believes the pain will be widespread. Most of the damage will happen in the bigger companies. Lots of your bigger companies, by the way, guys, then it's not really been a recessionary bear market, more just a pullback. Nothing that unsimilar to what we've really seen thus far from 2008 onwards, this kind of Goldilocks economy. So suggests that there's still a lot more pain to come. I largely agree with what Mike Wilson's saying. And I think this, for somebody who's in long positions in the crypto space and willing to play that Russian roulette game, this is something that I actually take with a degree of severity. So not just tech, by the way, it could be consumer, it could be industry, so relating to the Dow Jones there, which is, I think, 7% off its all-time highs, maybe not even. So what bear market really is that seen? Wilson said, when those stocks had a tough time in October, the money went into these other areas. So part of that rally has been driven just by repositioning from the money moving. Wilson's forecast comes on the heels of prior pullbacks, warning of fast money. In July, he warned the June low was probably not the final move onwards. On October the 13th, the S&P 500 reached its 52-week low of $3,491. Not a time to sell everything yet. Wilson does not consider himself a full-fledged bear. This is not the time to sell everything and run for the hills, because that's probably not until the earnings come down in January and February, he said. Wilson expects bullish tailwinds to push stocks higher over the next few weeks. It's our job to call these tactical rallies. We've got this one right, Wilson said. I think this tactical rally has a leg into year end. So he's still calling for further upside. So from a long position, this is rather important. This, of course, is recent, where he's came out and said we're going to call it. So he's essentially expecting, and I think he's right, actually, that look, this is likely going to come to an end. Why do I think that? Well, I think the dollar actually is showing bullish divergences here, in the sense that it's putting in lower lows and higher lows on the RSI. And I think that this is to be taken rather seriously. This is you know, really what I'm talking about here. You know, you're putting in these lower lows here, but you're putting... So this trend, I think, is subject to change, or certainly subject to get some sort of a pullback. And I do think that we continue to rally. We continue to pursue this Santa rally into year end. And then essentially we're looking at, you know, this playing out. And really he's calling for the stock market to go as low as 3,000. So if we take it from where we are at the moment, you know, that's a substantial figure. You know, he's calling for 24% downside. This ties in with our kind of thesis as well, that we still haven't seen this play out. So we're essentially doing a very similar thing to what we've seen going into, you know, we haven't seen this sort of a price. We've still got this potentially to come for the stock market. So this is alpha in regards to the fact that this is going to relate to the crypto space. You know, I do think, and this has been our sort of forecast, I'll get a clean chart. Who are we going to use? We'll use Kraken's. You know, this is kind of ties in with our forecast that essentially this is what you're now looking at. And this is to be taken very seriously, guys, because you guys know how bearish we've been really since 44K. But, you know, the fact that we're calling for a rally is not very much like us. But this is essentially what we're calling for. How long it extends for, I'm not 100% sure. You know, we've called for potentially a retracement of the FTX spill. You're at least going to get somewhere. You know, we're already sort of making headwind. But ultimately, I do think that this is going to lead to the eventuality of downside. And this is the playbook for me. You know, you've got this bullish div. We looked at last time we had a bullish div. So you're setting up similar structure. It's probably going to lead into capitulation. This ties in very nicely with Mike Wilson's comments on the fact that, look, there is definitely the room for a bit of extension of this rally. But this is still very much an intact bear market that's really going to be driven and ultimately kept in its fullest, you know, continued as a result of the economic conditions that we find ourselves under. So this is just a bit of a different video, a little bit of critical thinking gone into this. Let me know if you enjoyed this video. Maybe we covered the stock market a little bit more. I will touch on it all in my daily market update. But this was just a sort of potentially stock specific looking at Bitcoin and how it may affect it video. And then we'll be covering, you know, more sort of macro different markets like the dollar and everything, gold in our daily cryptocurrency market update. Thanks a lot for watching, guys. Have a wonderful Monday, and I'll catch you all in the next YouTube video.